Well, I think the interrelationship between China and the U.S. is of paramount importance, not only for Chinese investors, but for U.S. investors. And the discussion on tariffs, it's been somewhat of a one-way street so far, with the U.S. Stock market doing well, the dollar strengthening. But there can be a knock-on effect for the U.S. market if you see a slowdown in China. Our view is that the economy is under stress, but perhaps not to the extent of Mr. Kudlow's conversations today. And that if there's a focus on specific parts of the market, for example, healthcare, the environment, energy, there still remain some very attractive parts of the market to play at heavily discounted valuations.
Okay, we'll get to that in 1 second. But Tim Seymour, weigh in here on the same question. When Larry Kudlow talks about China falling apart, one, do you believe it? And two, if it's true, is that actually good news? It could be bad news for the U.S. market.
Right. So, Michelle, it depends which economic data you're looking at. I mean, on a macro level, fixed asset investment is at the low since 1999. Retail sales are beyond 10-year lows. And yet the industrial production numbers have been largely sideways. GDP numbers have been largely sideways, although people think those are largely massaged numbers. There's two different dynamics with China right now. One is a macro dynamic, one is a micro. From a macro perspective, they're trying to switch from monetary expansion, monetary policy, much like the rest of the world, into fiscal. And in the past, fiscal expansions have led to market rebounds. But I would argue, yes, that the healthcare is interesting. High growth areas in China are very interesting. The Chinese stock market is trading on a very different dynamic than I think the economy here, and I think the market's oversold.
Jonathan, you mentioned sectors that you would be interested right now based on your belief about where these markets are going. What are they? Yeah,
I think to the earlier comments, there's areas that we would avoid. The banking sector, the property sector, over areas where there's too much capacity.
This is in China you're talking about.
Yeah. This is in China we're talking about it. But if you look at specific areas where continued investment is not only going to come from the public sector, but the private sector, as I mentioned, healthcare, you're looking at commodity and consumption growth that we think is going to continue. And again, environmental degradation is a key theme. And you can play that in different ways. For example, there are attractive U.S.-listed names that have connection to that growth trajectory.
Are we showing them right now? Agro, AGRO, and Geeling? Golar?
Yeah, so we talk about agro as an interesting commodity play given its location in South America. Obviously, with tariffs increasing against U.S. agricultural providers, the demand is going to go somewhere. Agro, which is New York Stock Exchange listed, supplies its product in dollars, is poised to benefit from that development, as is Golar, which is a natural gas midstream company selling into China, which is desperately trying to wean its way off of coal.
Tim Seymour, last word very quickly.
Well, I'm concerned about commodities here, though. I think Chinese demand is certainly caught also in both trade wars and currency dynamics. The stronger dollar is going to knock down commodities. And in fact, I think there's more downside than upside in the short term.